Alright, ladies and gentlemen, today's video, you can see, we read the title. We're going to be basically showing you guys how to trade with an SMT divergence. So basically here, guys, we have two correlating markets, the dollar and then the Euro USD. In order to catch an SMT divergence or a turtle soup entry with SMT, really just going to have to use, like a S&P, NASDAQ, those type of markets. So an indice, the best way to find a turtle soup using SMT by far is, it could be Euro and GU with dollar index. So you want to have more than one, but I'm going to be showing you that, and today I'll be displaying that. So whenever you try to look for an SMT, you're going to want to see a divergence between two of the pairs that are, of course, equally opposing each other. So up here we have the dollar index. When dollar goes up, you can see Euro drops, and when Euro goes up, you can see dollar drops. So you can see Euro created a low, and then dollar created a high, and then eventually dollar ran through that high. An SMT here on the weekly is pretty hard, I won't lie. So you're gonna want to drop down to the daily. On the daily here, you can frame a lot more SMTs, I should say, on here. So this is perfectly one right here. And so with here, you can see this never created a lower low, even though this one created a higher high. So that would be an SMT divergence. Another SMT divergence would be right here. You can see we created a higher low, and then right here we created a higher high. So that means this one should have created a lower low, and you could have seen, basically what that is telling you is dollar is strong, Euro is very, very weak, and I shouldn't have created that. It's going to rally down. That could give you the indication here that dollar is most likely to go up. This one should have not gone up, is most likely to go down now. Again, you can find multiple SMT divergences here. I do prefer, again, just higher time frame SMT alignment with a lower time frame one. That can provide a lot more context for your SMT divergence trades. So right here, all right, so this would be your SMT divergence here. This is a SMT divergence with dollar and Euro. Again, dollar created a higher low, this one created a higher high, and that would be an SMT divergence. Why? Because the dollar should have created a lower low in order for us to validate that higher high being created on Euro USD. This could have been your turtle soup entry. You could have seen that a lot of confirmation, with the higher time frame ones, especially on the daily chart. You can just see multiple SMT divergences for lower prices, and you basically could have entered and then had your stop loss, just a couple pips above that imbalance over here, guys. That's what I'm looking at right here. Again, because we were supposed to create a lower low on dollar, but we never got that. But on Euro, basically we created a higher high, which was an invalidated higher high, and that's why you can see prices wanted to drop on Euro very quickly after. So whenever you have a higher time frame alignment SMT, again, you can just see it on the lower time frames how that would be an invalidated SMT, and you probably could frame a trade idea on that again just very easily. On lower time frames, you'll be able to spot a bunch of SMTs, but that doesn't mean they'll be valid. It just, you have to follow the higher time frame SMTs or use the higher time frame ones. I don't like using an SMT divergence that's under the 15-minute time frame, if I'm being completely honest. And I try to look for ones that are usually above on the hourly chart. That just provides a lot more context, in my opinion. It lets you follow the trend or the higher time frame order flow. Lets you see if you're in a ranging market, like this is all ranging, and then you eventually start consolidating. That can help you indicate if you're in a consolidating market, and then eventually a trending market, lower time frame or lower prices indicating. So here you would probably not be able to frame a trade idea because, this would probably be a valid SMT right here. This one created, so again, this one created a lower low, this one created a higher low. This was supposed to create a higher high, but that can indicate to you that Euro was weak. You could probably go look at GU, and that would probably help you indicate if GU was stronger on this occasion. So let's go do that. Again, this is a valid SMT because remember, dollar created that lower low. This one was supposed to create a higher high. That goes to show that GBP USD was very strong and Euro was very weak, so you could have took a short with Euro, and that would have been your indication there, right there. Again, this is how you frame a trade idea using SMT divergence. Alright, so this is how you frame a turtle soup entry. You can see we are having lower prices, and right here on NQ we ran through this high, and if you can see, basically on SPX we never ran through that high. So that would be a very, very, very strong indication that this was the stronger one. This is the weaker one, but overall we are still creating lower prices or wanting lower prices, probably seeking out this liquidity down here, you know. So that could have been your turtle soup entry. This is how you frame a turtle soup. It's way better in my opinion if you have like a market like Euro and GU, and then you use the dollar for more correlation, or an SPX and NASDAQ. That is very, very, you know, high indication that price is most likely to respect that turtle soup with SMT. This would be another valid turtle soup. Again, we are just seeking higher prices, and you can see for SPX we were the weaker one, and then for NASDAQ we were the stronger one. This is how you frame a turtle soup with SMT. This would be a valid turtle soup. You can enter as soon as price just ran right below it, and you know, just a beautiful trade idea in my opinion. You could have your stop loss right below these lows. Never got tapped. Tight stop loss. Risk reward up there. A nice good risk. Okay, you don't want to have that tight stop loss. Okay, so then you just get a 1 to 3. Beautiful trade idea. It takes out these lows, I think, or this rejection block. Even then, you know, this is very high confluence. You don't have to set a stop loss, but it is recommended. Again, just follow the higher time frame order flow. We have videos on that. But if you frame this with more of context, basically, if you frame an SMT divergence or turtle soup entry using SMT with higher time frame order flow, or the concepts we have been teaching, like how to find your daily bias, your draw liquidity, you know, you can add more context. This would be by far one of the best indications to take a trade, or, you know, following that trade idea and validating it with this. And this is by far one of the most powerful ways to trade in my opinion. And shout out to ICT, man. This is so beautiful, man. One of my favorite styles of trading. It's, you know, very clean, very nice, and it's one that you can't go wrong with, in my opinion. You cannot go wrong with this. Just follow the order flow and find the weaker one or the stronger one, and see which one is lagging in the correlation. This one right here will be the lagging one. This would be the stronger one. And you can see we came down. We weren't supposed to take these lows, even though we did on this one, and we rallied higher. And that would be the beautiful trade idea. So if you enjoyed this video, thumbs up. That's all I ask for. Enjoy your rest of your day, and go back test this strategy.